Well, if the attendees at the Milken Institute Global Conference are any indication, most folks have recession on their mind. Take a listen.
We are probably heading into a recession at the back end of this year.
We're looking at some sort of a recession. How hard, how long to be determined.
It's interesting, they went around the room today and they asked, when do you think the recession's coming? When do you think the recession's coming?
If demand goes up, we could see prices going up. Now, at the moment, there are concerns about economic slowdown, recessions.
It is a recessionary backdrop, but, as I have sometimes said, I think we're going to have a non-recession recession.
Joining us now to dive deeper into what's ahead is Victoria Fernandez, Grossmark Global Investments Chief Market Strategist. Good to have you on this show, Victoria. So as we saw there, a lot of talk about recession and trying to get a clear picture of the type of recession. And on top of that, you have then the strong consumer. Help us make sense of your predictions here and what you see in terms of a recession ahead.
Yes, so we do see a recession coming later this year. The clips that you were just playing, it seems like everyone anticipates it. It's the timing that's more of a question and the size of that recession. So we expect to see it later in the year, maybe beginning of fourth quarter, end of the year, and it should be a mild recession. And we think mild because of the strength of the consumer, as you just mentioned. The consumer continues to hold in there. And if you look at some of the information coming out of the last GDP report, it actually showed consumer savings moving up from 4% to 4.8%. So they're building their own little nest egg once again. After spending down all the stimulus payments that had come in, people thought that would be the end of the consumer. Demand would decline. It looks like they're setting themselves up to continue that spending as we go. I don't think it's going to be enough to counteract all of the headwinds that we have in the market. So there will be a recession, but I think it'll be somewhat mild.
What areas of the market would be most beneficial from a resilient consumer right now as you're tracking in terms of an investment or portfolio play that some investors out there may be looking to enact?
So we always talk about when we're heading into a recession, you want to focus on those names that have what we call the quality factor. So it's not necessarily a particular sector, but within the sectors, who has the strongest balance sheets, who has that good cash flow, who has the good management teams. Those are the names you want to focus on, but have some exposure to some defensive names like healthcare or staples. Cigna is a name we've been adding to, but that doesn't mean you don't have that consumer exposure because we think they're still there. So we like credit cards like MasterCard and Visa. You could go a little more cyclical with American Express if you wanted to, but also some of those names like a Coca-Cola or a Pepsi allow you to have some exposure to the upside of the market as the consumer stays strong.
And Victoria, we know in a lot of these earnings calls, we're still hearing about those macroeconomic pressures and some cautious tone that we're hearing in some of the forward guidance as well. When you think of this phase that we're in now with the Fed, sort of bracing for a pause here, how should people be positioning themselves?
So it's interesting, I guess you have to determine first if you are not going to fight the Fed or if you're not going to fight the market, because they're really telling you two different things. You have a market saying you're going to have about 3 cuts before the end of the year. You have the Fed saying there will be no cuts before the end of the year. So you have to kind of decide which part of that argument you want to be on. We tend to agree that the Fed is not going to have cuts the rest of the year, that they might pause at the June meeting. That opportunity is there for them to do. But I just don't think, Rochelle, that we can bank on that. If inflation numbers continue to be high, especially that super core number that they look at, if we continue to see that move higher, the core CPI moved higher last month. It didn't come down. If those things continue, I think the Fed has the opportunity to go another 25 basis points in June and then start their pause. So there could be some more tremendous volatility for the rest of the year.
It seemed like coming into this earnings season, there was talk of an earnings recession. From what we've seen from companies thus far, is there anything that points to, and even given the beats that we had seen on some kind of beaten down expectations, should that be the expectation at this point, that companies are going to continue to signal caution and kind of sandbag some of the expectations in the street until they get the all clear from the economic framework?
Yeah, so it does look like we're going to have the second quarter of negative earnings coming through. We had it last quarter. It looks like we're going to do it this quarter, but at a much lower level or margin, I should say, than what was anticipated. Originally, it was looking to be 6 or 7% down on earnings. Now that's around 3.5%. So it's come back. And like you said, that bar was lowered pretty significantly to make it easier to beat. So look at the guidance, see what's going on. We're hearing a lot of information around buybacks, which would be supportive on a short term for the markets. Strength of the consumer, but again, supply chains, all of those things are still part of the conversation, even though they're improving. So I think we get negative earnings this quarter. Pushes out, the conversation again as to next quarter, what do those estimates look like? They're not coming down as much as people anticipated them coming down. So does that mean the market's actually looking for something better? If so, that looks kind of in conflict to me to what the Fed's telling you. So again, we must be cautious.
And Victoria, in terms of the next catalyst for the markets, I mean, some analysts we spoke to said it all depends on what we hear from Apple at this point. Obviously, a massive company, incredible influence, and especially global exposure to countries like China. What do you think is going to be the next catalyst for markets?
Yeah, no pressure on Apple at all, right, with the earnings report this afternoon. I think when we're looking kind of on a macro perspective, obviously what's happening in the financials and in the banks is going to be key. We were speaking a little bit earlier in the green room about maybe a self-fulfilling prophecy coming here on some of these. The more people talk about the concern in the banks, the more you have people pulling out deposits, and then the more you have talk about deposits going down. So that's obviously an issue. Commercial real estate is going to be an issue if it flows through to that. Commercial real estate makes up 65% of the loan book for small banks. So I think if we combine that with some of the issues that we're seeing already, and again, we have earnings continuing to come down as we go through the year, earnings expectations, all of that together with 500 basis points of hikes working their way through the economy, I think you're sitting at a level that could be pretty concerning.
Victoria Fernandez, Grossmark Global Investments Chief Market Strategist. Thank you so much for joining us here in studio today.
My pleasure, yes, thank you.
I speak with you all the time through the television. Yeah, great to have you here.
Thanks.